The five main types of coverage available in the marketplace today are: first, liability coverage for security failures and privacy breaches. Second, coverage for your organization's costs to investigate and mitigate a cyber event, such as a data breach. Third, your lost income due to a cyber event. Fourth, costs you incur to recreate or restore data which may have been corrupted, lost, or stolen after a cyber event. And fifth, amounts to recoup an extortion demand made against you to protect yourself from a cyber event. Especially as technology progresses and these coverages evolve, treasurers should have a frank discussion with their insurance companies about how the company views their principal cyber exposures and whether or not the policy will respond to what the treasurer sees as his company's cyber exposures. There are a number of components which go into the underwriter's assessment of your cyber exposure and ultimately affect the premium. These include the number of records or other types of sensitive information that you have and the ways in which you're protecting it. To the extent that you can add to the number of people who are safeguarding your sensitive information or strengthen the processes or technology you're using to do same, you can reduce your premium. Cyber claims are very interesting and atypical of other insurance claims for two reasons. The first is that generally 2/3 of cyber events are discovered not by the insured themselves, but by someone else. So it's an interesting dynamic when the insured has to respond to allegations that they've been breached without discovering it themselves. The other interesting aspect of cyber claims is how fast-moving they are. Coverage to mitigate these cyber events often results in monies being spent within days or weeks, as opposed to other litigation, which normally can drag out from a month to several years. Treasurers need to be involved before, during, and after the placement of a cyber insurance policy. It is key to understand the amount of cyber exposure they have and how much they're laying off in contrast to how much they're retaining. So you need to understand your risk before you go to market and try and transfer it. During the placement of a policy, treasurers should make sure that the kind of cyber exposures that they're concerned about are indeed contemplated by the insurance policy. Even after a policy has been placed, cyber exposure, for the reasons we talked about previously, changes every day, and treasurers need to constantly reassess whether or not the amount of cyber insurance they're buying is the right amount, and the amount of cyber exposure they're taking has changed or has evolved.
I created many such companies, more than 60 of them. Then I came up with an idea to call them a special category of business, and I started calling them social business.